Everybody knows Uncle G. Who? Grant Cardone.
Do you love him? Do you hate him? Do you agree with him? Do you disagree? We have some opinions.
If you have not subscribed already, go ahead and click the subscribe button and ring the bell so that you get alerted every week when we drop new videos.
Grant Cardone is one of the most influential people in both real estate and sales, and he definitely is opinionated about what you should or shouldn't be doing when it comes to real estate.
And in this video, we're gonna share with you our opinions and how they line up with Grant's strategies. Okay, so the first thing I wanna talk about is breaking down Grant Cardone's wealth building strategies, which a lot of people, they differ. Like his opinions differ from what we're taught in society. But I gotta tell you, I 100%, and I'm pretty sure Stacey does too, 100% agree with his wealth building strategy. So what are they? And we're gonna talk about two specific things that he goes into his wealth building strategies. And the first one is renting versus buying, right? When we were all raised, we were all pretty much taught the dream. The dream is to, you go to school, you go to college, and then you get the job, and then you get the house, right? And so when I was raised, I was like, oh my God, by the time I'm 25, I gotta have my first personal residence and gotta buy my home, and I gotta do college, and I gotta do all these things. No.
And we did it.
Yeah, did it, didn't work. Didn't work at all. So I adapted to this strategy of, you know what, I'm gonna lease what I use, but I'm gonna take my money and invest it in an asset that pays for the stuff I need. And that's what Grant talks about. He literally talks about all the time about how rent versus buy. You can take, let's just say we have $300,000 to put down on a house, right? And we put that $300,000 down and now we've got this personal residence, but the $300,000 we put down and now we still have to make the payment and we have to pay for the house, right? But if I take that same $300,000 and put it into an asset that then produces the money that I can then use to rent my home, well, now that asset can keep producing money for me. Then I could take more money and buy another asset and it continues to pay for it. So I shifted my strategy to try to have a property for every bill, right? So I got a property that pays my rent. I got a property that pays my cell phone and my car payment. I got a property that paid my insurance. That was the initial strategy. Maybe you can kind of talk a little bit about his next one because his wealth building strategy about leverage versus Dave Ramsey, right? That's a highly controversial topic. It'll definitely divide the room.
A lot of people in the wealth area have heard of Dave Ramsey, and Dave is someone that for years I was listening to and following. But some of the things that he teaches are literally the exact opposite of what you need to do for long-term wealth building. So it's almost like if you're thinking from, I want to build wealth long-term and create cash flow, Dave Ramsey's approach isn't going to get you there. So this was many, many years ago, but I was going through a time where, just things were tough, like financially, and I was seeking knowledge and answers and growth, and I came across Dave Ramsey, and his whole thing was, look, get out of debt, have no debt. And I was like, wait, what? Because I was a real estate investor. And I was like, I don't understand this having no debt thing. So I kind of had to operate in both worlds, and I did the envelopes, and I had budgets for everything.
What do you mean the envelopes?
Told you this.
I don't even know who Dave Ramsey is, guys. That's how bad I am. I'm sorry.
What I learned from Dave Ramsey, which was actually very helpful for me at that moment, was how to be more disciplined and actually say, okay, this is how much I have coming in, and this is where everything is slated. When it comes down to it, the whole thing that was beneficial was learn how to live on a budget, live within your means. But beyond that, that was the main, that was why I was like, I liked his approach, but it really doesn't fit our world. So the whole idea is leverage, because banks loan you money on real estate. It's the reason you see everybody who is wealthy owns real estate. Find anybody who is uber wealthy that doesn't have real estate as a big part of their wealth building strategy. You will not see it.
That's true.
It doesn't happen.
That's true. Okay, so if you like this video, if you like what you're hearing so far, click the like button. And we're gonna go ahead and dive into some of Grant's rules, right? The investing rules. But before we do, I just wanna get a precursor. What is your actual thought? What's your opinion on Grant Cardone in general, in his strategy?
All right. Well, up until now, you probably think, based on everything that we've said, I love Grant Cardone. We're totally aligned with them. Well, you haven't heard the rest of what we're about to talk about where we're not exactly aligned. It doesn't even matter. We love Grant Cardone. Who doesn't love Grant Cardone?
I think he's very genuine and authentic. Yeah. And yes, he might come across as highly opinionated, but his opinions make a lot of sense. There's only a couple things where we differ in our strategy, and it's more than likely because we don't have a jet. Just kidding.
Grant Cardone, he wasn't born with a silver spoon in his mouth. I actually really appreciate that, because I think when people have to build their own wealth and they're not starting with something, it really creates a level of character that is difficult to get when you get handed everything, which like we're gonna have to figure that out with our kids because we certainly can afford to get them whatever they want, but we have to figure out how to help them know how to build that same character that we built, that clearly Grant Cardone. So I really like him. I'm 100% about the things that he teaches, but I feel like we do have some other things that we can share with you that will be beneficial to you, a different way to look at things to really help you build wealth, in our opinion.
Okay. All right. So the very first thing that I want to talk about, and this is where I can see where Grant is going with this, and I like it. But when it comes to actually implementing it, I get a little bit like, oh man, what could happen? And that is this. Grant's very, very open about the fact that he doesn't look at properties that are vacant, right? And why should we? Because you want cash flow. So I get it. And what he does though is if he sees a property that's really good and the numbers look good, what he will literally do is go ahead and put in the contract that it needs to be at 95% occupancy by closing. And for me, that's smart, right? But then I kind of think about, well, but what kind of tenants are they going to put in there if they got to cram and get them in before we close? Is their criteria going to be top notch and at my caliber? Not that I'm sitting there selecting tenants, because I'm not, but I still want to make sure the best tenants are in there. And so I maybe need to understand a little bit more about how he makes sure that they're good tenants going in. But I understand the strategy. We just don't do it. We don't force the 95%. In fact, we look at it as an opportunity for value add.
Yeah, and I think that's where this is different. I think Grant's main focus is really cash flow. And there's nothing wrong with that. Like in the other videos, we've talked about, the two main approaches, either going for stabilized or performing, like cash flow, or going for value add. So for us, we look at vacant. We're not looking to buy vacant apartment buildings. So I do agree with him there. I wouldn't be buying in a vacant apartment building. However, I think Grant really focuses primarily on like apartments, and where we focus on multifamily, and not just for our own stuff, but we teach multifamily. So multifamily is something even as small as a duplex. Well, we have a lot of our students and we have done it a ton of times, who are buying a vacant duplex. It's a fixer-upper. No one's living there because nobody could live there.
You know what though? That's probably because Grant's range. He has a specific range.
Oh yeah, So Grant is only focusing on 16 to 32 units. Or I don't know that he only focuses on that, but that's his like sweet spot.
Yeah, sweet spot.
Anyway, the whole vacant thing, if you're buying something that's a smaller multifamily, there's nothing wrong with buying something that's vacant, because you can get in there, get your rehab team in there, you're only talking 2 to 4 units, get it up and running, and be able to then refinance and pull capital back out, the BRRRR strategy. So I just don't think that that's in Grant's kind of wheelhouse, but since we teach small multifamily and large multifamily, I don't want you guys to think that that's not an opportunity. It absolutely is. It's one of the best wealth building strategies if you're choosing to start with something smaller. What we find working with a lot of new investors is that closing a 16 unit, it might not seem like a big deal, but closing your first apartment building, like you don't even understand the level of learning curve that is ahead of you. It's intense. And sometimes people are a little intimidated by, man, I have to buy something that's 16 to 32. That's so much. It might be just a mental hurdle. There's nothing wrong with starting off with something that's 5 or 6 units as your first deal. And that is where we really would differ in what we teach people. We're like, look, of course a 25 unit's gonna be better than a 6 unit. However, how quickly can you actually get your mind around and your finances around closing on your first deal, even if it's 5 to 10 units, if it's small, but you can actually get it done. What does it do for people when you close that first deal?
You book a win. It's like all of a sudden you'd close your first deal, which may have taken you a couple months to figure out how to get it in and then close it. And then you're like, whew, I finally did. And then all of a sudden you've got 4 more under contract, right? Yeah. And you're trying to figure that out.
It takes just as much time to buy a 25 unit as it does a 5 unit. It really does. So the challenges and why we don't push our apartment students to go right into 25 units unless they feel like they're mentally ready to is because the mental hurdle to jump over to how do I do that? And of course a 25 unit is much more expensive, or it has a lot more cost to it, to a 5 unit, where someone might be able to take down a 5 or 6 unit on their own using their own money. They may or may not be able to do that with something much larger. So our whole thing is, look, just get in the game more quickly. That doesn't mean rush it or make a hasty decision. It means close your first deal, even if it's small. And it's hard. The first deal is the hardest one to do for every reason, the learning curve. But when you've closed one, remember Temmie closed his first 6 unit. He'd already bought a couple of duplexes. He closed on his first apartment building, And all of a sudden, his realtor was like, oh, well, let's do another. And then he had another realtor and another realtor. And the whole reason is because everybody knew he actually closed. And even though it was only 6 units, it wasn't a huge thing. It didn't matter. Those realtors saw him as someone who could get the job done. So Grant says 16 to 32 is a place to start. We say, you know what, start wherever you can actually wrap your mind and your finances around and get the deal done. It doesn't have to be a home run. It needs to be good, it needs to be decent, but I promise you, the better deals come in time as you show that you can actually close.
Okay, so the next thing that we want to talk about for Grant, he does 4 quadrants of real estate investing, right? He has 4 quadrants, and you'll see it on his show. He has a really cool show where people could call in and analyze a deal with him. He does it really quick, and he puts these 4 quadrants up on the board, and it's price, down payment, debt, cash on cash return. And so he'll walk you through, okay, so if the price of the property is $1 million and you put down $300,000 and the debt is $750, what's your cash on cash return? And then he emphasizes cash on cash return. That's his biggest priority, and we're aligned with that too. Cash on cash return is a big deal for us.
We do not invest for appreciation. We invest for how is our money working for us?
Exactly.
Cash flow.
Exactly. And I think that his focus on cash flow is what drives that no vacancy buildings.
Yeah, it is. It's his whole approach is focused on I want it performing now. Yeah. And where we like to actually go in and take a little bit more time and get the appreciation. But he's a gazillionaire, and we're we're maybe only a denillionaire. I don't know. We haven't hit the G in gazillionaire yet.
Yeah, and he has enough money to get on a jet and go to his markets. As a matter of fact, that's another thing.
Oh, right.
So
Yes.
one of his other rules is that he's like, guys, and I love the way he talks, by the way. He's like, guys, you gotta get in your market, right? I could do my best Grant Cardone imitation, but I love the dude. He's just so genuine. Yeah. But he talks about how he goes to the markets and he gets a feel for it. I think he's a very kinesthetic human being, right? He's got to feel it, he's got to see it, he's got to know, put his hands on it. And so we don't teach that though, right? I understand that he likes to do that, but he also has the means to do that right now. And when you're first getting started, you don't have a jet, number one, but sometimes you don't even have money for a plane ticket to go to the market you're thinking about.
Or time off of work.
Right? We have a remote investing strategy where you can assess the market from anywhere and make offers and analyze properties from anywhere. And that is a little bit more scalable when you're first getting started.
It really, and the fact of the matter is, we do have the means now to just hop on a plane. We didn't buy a jet, but we bought an RV, but that takes a really long time. But anyway.
It could be like the magic school bus, an RV with wings.
And so the whole thing, we have built financial freedom. We have financial freedom at this time. We have time freedom. We don't have to go to a job. Our time is our own to make our decisions. Make no mistake, we work our butts off. Like, we're hard workers, but we can choose. We took the day off yesterday.
Yeah.
I drove around and what was that little?
It was my birthday, so she rented a slingshot.
Yeah.
Rented it, we didn't buy it.
Right.
Thank you, Uncle G. We had a good time.
It was so fun. So we have time freedom. The other thing that we have that does not fit with, you gotta go touch it, feel it, be right there in the market, is location freedom. But we can literally go anywhere at any time, and it doesn't impact our real estate investing. We can physically be anywhere. So now we truly have all of the freedom that we need. So that is a major change in how we do things and how we teach things, because our values are more aligned with, we need freedom because we have kids and we have other things that we want to do. We don't want to spend time having to be there.
I want to be at that level someday.
Well, yeah, let's take a jet, but to Italy.
Right. If you take anything away from this video, take away this. Start where you're comfortable. Stacy is comfortable with starting out just a duplex, a quad. For me, I suffered from the opposite. I just made an offer, and if I lost money, I lost my shorts, whatever. Right? I had to learn a different behavior. Get that first one and book that win, and the momentum comes. If you've been wanting to get started in multifamily investing, but you just don't know, like, what's the first step, second step, third step, or you just don't want to make any mistakes, like, go to the description and click on that link so that you could book a call with our team, and they'll talk to you and explore all of the options available to you to get started.
Yeah, maybe we can help you. The other way we'd love to help you, we have every week we have an Ask Us Anything, and we have a Facebook group called Multifamily Real Estate Investing. We'd love to see you in there. You can go to the events and go to the Ask Us Anything, get into the Zoom, and we are literally, Jen and I are going to be there on the call every week, and you can come in there, you can ask us questions, you can get some help on your deals, and just let us help you get to where you want to go faster.
1000%. And in the meantime, watch this video on remote investing and learn our system until you get your jet.
Yeah.
And we'll see you guys next week.